I think you have a lack of understanding of the financial markets, right? You're proposing that Apple spend its money and buy companies, right? While interest rates are going up, while we're going into a recession, while
Excuse me, the
demand
interest
side is
rates.
going
Excuse
down.
me,
We have a
excuse
demand
me,
side
excuse me.
recession, right? We
The
have a
interest
supply side
rates,
recession,
the
and you
interest.
want
Apple
Apple to
has.
basically spend all their money buying up companies while these
I'm not
assets
saying that.
are going to
I'm not
have
saying.
discount rates
Excuse me.
greater than that, while earnings are going to go down. And
Excuse
you want
me.
Apple to basically get rid of their buying power and get rid of their leverage to basically scoop up these assets for pennies on the dollars. You want them to spend it before the market goes down and corrects. Do I understand what you're
Well,
saying correctly?
first of all, I don't believe in testing the depth of a river with both feet. So that's number one. You got it way wrong. I'm not saying drain the bank, go fucking full retard, and spend all of your money. That is not what I'm saying at all. That's number one. Number two, you are under the assumption you brought up interest rates. Interest rates are applicable when you are taking out a loan to buy a company. Apple is in no position where they need to do that, and they have a very clean and strong balance sheet, a very clean and very strong balance sheet with strong financials to back them. So there's no reason for them to take out loans to buy out certain companies. That's number two. The other thing is that, yes, they could use leverage and they could write some of that off, and they probably realistically should. But in a downturn market like the one we're heading into, very, like you said, rising interest rates and very recessionary, you have to be careful and you have to tread lightly. The other thing is, I will say this, number three, is that you only buy other companies when it's, here's the term for you, synergistic. Synergistic. You buy a company when you believe that in buying that company, you will be able to make your money back within a reasonable amount of time and it will add value to the pipeline of products you already have. In the case of Facebook, them buying Oculus at the time people thought was kind of nuts, but Facebook has, and even to this day has so much capital that buying Oculus was so worth it for them because now it's another pipeline of product. It's something that they can kind of build off of and kind of build themselves out to be more of a multinational corporation rather than just a one trick pony. They obviously didn't really build out Oculus as much as they should have, but by adding that IP into their pipeline of products, it also diversifies the streams of revenue. And it is a new and exciting space, particularly with VR. Why Apple didn't do that, I have no idea. Apple could very easily make a VR headset and tap into that. They could very easily think about it. Apple, people were talking about Apple Car, Apple Car, Apple Car. Elon Musk was talking about it. Okay, Apple could have partnered with BMW, which this was rumored to happen for quite some time. They very easily could have partnered with BMW and literally just took a BMW i8, which is a hybrid, by the way. A lot of people don't realize that. The BMW i8, I know you're not a car guy, really, but that's the BMW that looks like the spaceship with the doors that go up. They could make it white and put a fucking Apple logo in there and then slap an iPad as like the touchscreen or whatever in like the console of the car, and people would line up in droves to buy the car. They'd be like, Apple Car, Apple Car, Apple Car. Like they could sign so many things. They could license out the technology in that sense, or a car. You could do a partnership and do a rev split. Like there's so many different things they could do that they just don't do because they have some guy who's the CEO now who, clearly he's very smart and he's very bright, but he's a linear thinker. He is not an exponential thinker. He's no Elon Musk, and he'll never be in that same conversation. And it's just it's mind blowing to me.
Okay. I have to basically refute and everything you just said because you said a lot of things that were just plain out wrong. Okay, you said he's no Elon Musk, but who is Elon Musk? Elon Musk is one of a kind, so that refutes that statement. And then you said interest rates, right? They don't mean anything because Apple is not borrowing money. That is completely false, right? That is completely wrong. And that, stocks are basically based off of risk premiums. And you have to put a risk premium on the treasury rates, which is then thus based off of the interest rates. And that affects the company valuation. So even if you're not borrowing money, right, the interest rate affects how much Apple is going to pay for the company when they discount the cash flows. So basically, what you said there was completely false. It was completely disingenuous, and you're misleading the audience in that regard. and you have to basically discount uh, the stock back to the present day cash flows and apply the proper risk free premium on the asset. And when interest rates are rising, Apple can get a much bit better deal if they just hold the cash and they wait instead of basically scooping up these assets, like you said right now, in a time that is not really good for scooping up assets. That's why Elon Musk backed out of the Twitter deal, because he knows that the risk premiums will be coming down in 12 to 18 months, and he could basically buy Twitter for cheaper, or he could start his own social media company for cheaper. So basically, saying Apple should get rid of all this cash and all their leverage in a fucking recessionary environment is completely ludicrous. It's completely insane, and it's basically it's borderline crazy and unprofessional.
I think for Apple, especially as a company that holds well over $200 billion, I think they could afford to make a deal for $1 billion or $5 billion or whatever the case may be. Maybe limit yourself to spending only $10 billion of that $200 billion, and just see if you can incorporate some type of new and innovative IP, regardless of the environment. If you make your money when you buy, right? So if you buy at a good price and you can incorporate this IP into your umbrella, whether or not you overpay by $1 billion doesn't matter, because if you end up making that money back and then some, you're good. You're in a good spot. Like think about what Facebook paid for Instagram. A lot of people at that time would have said that valuation's high. They more than made their money back on Instagram. Think about what Facebook paid in buying Oculus. They've more than made their money back on that. Think about what Google has made in data collection and in terms of increased valuation and in terms of recurring revenue from YouTube, right? At the time, people said, you guys are fucking crazy. It's 2005, it's 2006. Google, you're going out, you're buying fucking YouTube. What the fuck is YouTube? And then now look what happened. So it all comes down to, and another aspect too that you are wildly discounting. You want to talk about discounting cash flows. How about you discounting the brand recognition, the brand loyalty, and the built-in consumer base that a company like Apple already has, right? There are people who are Apple diehards, and they will use anything that Apple slaps their logo on. That in itself is inherently valuable because it means that you automatically have a built-in consumer base for the product once it is incorporated under the Apple umbrella, which means that there's already recuperation of capital that you deployed in purchasing another company. So you are wildly discounting that. Now, if you want to get into fundamentals and talk about
the valuation says you should buy it at $3 billion and
Well,
not
they can innovate and,
4.
basically form the product
who
themselves.
cares?
If
Who
you
the
think their
fuck
brand
cares?
value is so valuable, right, then they don't need to buy it from somebody else. Why don't they just find the product
Okay,
themselves if the brand value is the one
because
that's
the
propping
whole
up the
thing,
valuation?
no, the brand, no, but the
Ah,
brand
ah, ah.
value, you're not following with my point. The brand value for Apple is in the marketing. That Apple logo means a lot to a lot of people. They see that Apple logo, they associate it with innovation, creativity, trust, um, all these other different things that are more qualitative characteristics that
Okay.
I personally don't subscribe to because I'm a quantitative guy.
What's the
So
point,
I
though?
typically, my point is this: you and I are very quantitative. We like to look at numbers, we like to look at fundamentals. We like to come up with a hard line valuation. But to discount the qualitative aspect of a company's branding and the trust that the public has in that company is silly. So if you overpay in purchasing if Apple overpays in purchasing a company and they overpay slightly, if they have that built-in base based off of qualitative characteristics of their consumers, it's perfectly fine. It's okay to overpay a little bit. It doesn't matter because they're Apple, and as long as they can properly incorporate the IP, I think it's worth it. Do you think that Disney overpaid for Star Wars and for LucasArts?
Okay. Let me basically go back because I have to basically,
You no no
explain to the
you
audience what you said. You said, right, you could overpay. right? I never heard of anybody saying that it's okay to overpay for an asset, right? You sound like a Silicon Valley bubble guy. And you don't invest in a company based off of what you can do for the company. You invest in the company based off of what its current value is and what the other company brings to the table, not the cost synergies and what you can provide for the company in the future. That's the benefit that you get on the upside. You Apple shouldn't basically put their brand value and what they can do for the company when buying the asset. That doesn't even make any sense.
You are wildly discounting the fact that whatever company Apple buys and then decides to roll out and with its own branding, in all likelihood, will garner a ton of attention. It will garner a lot of sales within their cult following and the people who routinely buy Apple products no matter what. And that can't be discounted. That's stuff that's really important. And as much as I look at fundamentals and things like that, I just look at it from Apple's perspective, okay? I look at it, I have a theory about investing. And my theory about investing is it's much like baseball. So Warren Buffett has this analogy too, where he looks at it. It's this chart, and it's about Ted Williams, who is a phenomenal baseball player, and it's called like the science of hitting. And those hot zones, cold zone thing that the MLB currently uses, it's based off of that. Okay. Now, my theory with investing is that you have a finite amount of capital, and when you look at it and you think about it extensively, with this finite amount of capital, or it doesn't even have to be finite, right? Because the whole thing is that you're constantly making money and you're constantly able to invest in new and innovative technologies or in new spaces or maybe in spaces that are, well established and you're just looking for, I don't know, I guess mediocre returns or whatever the case may be, right? You could keep swinging the bat. Like, it doesn't matter. Like, if you're Apple and you have $200 billion, I'm not saying to swing, all 250 billion and to make 10 swings. I'm not saying that. I'm saying $1 billion to you or $2 billion is a drop in the bucket. Like, for you to swing that and to take the chance at buying a company that you think could tremendously add value to you, I think it's worth it, even if the valuation is a little bit, is a little high. Like, if you buy a company out at $1 billion and you think, you know what, based on what we look at, they're really worth like 750 or they're worth half $500 million. I don't really see a problem with that. I really don't. If you're in Apple's position. And that's the beauty of it, is you have so much money. You have such a big war chest that you can gamble. You can make a mistake and no one's going to crucify you. You can make a mistake. Shareholders will actually appreciate that more because they'll look at it from the perspective of like, oh shit, well, at least they're trying new things. Like, that's the thing with Amazon that people don't realize. Jeff Bezos gives interviews, and in these interviews that he gives, there was one that I saw in particular. It was a TED talk where he basically said, he was like, oh, Amazon, he's like, we've made billions of dollars in mistakes, so much so that they only like relatively recently started paying federal income tax because they had a net operating loss carry forward for the last, I don't know, I think it was like 10 years or so, because of business losses they accrued in terms of R&D and developing new products and developing new technologies in-house or whatever the case may be. And you know what? When you really sit there and you think about it, it's like, that's how you innovate. It's like the company's constantly looking to innovate and constantly looking for new revenue streams and new ways to make money. Those are the ones that make it. They pass the great filter and they end up surviving any sort of economic downturn. Now, I'm not saying to recklessly fucking spend money if you're Apple, right? But I'm just saying, you can't be afraid. Like, you know, it's like you have $200 billion in the war chest. If you spend $1 billion and you fuck up, no one's gonna think otherwise, unless you're spending it on some like crazy thing. Like, I don't even know. Like, I can't even think of something that would be so horrible for them to do. Unless it's something that's incredibly divisive that will like actually work against you, and then the marketing will be used to kind of dissuade people from being a supporter of Apple or being a customer of your products. I can't really see any downside there.